Welcome to another Ariaswave market update. So in this video, I'm just going to go through a few key charts here that to me indicate probably the worst thing that could possibly be happening in the markets today. And that would be to do with basically the 10 yield spiking and the stock market topping. All right. So if you think what's happening to Facebook is just contained within Facebook, well, I think that potentially that's not true, and it's only the beginning of many things that are going to happen very soon in across the board, basically. Okay, so this is the 10-year yield. This is basically interest rates. Okay, now whether you want to talk about real interest rates, well, obviously rates are suppressed and they are already negative in real terms. Now, this is a pattern that I have a chart since 1100 AD, and I've been using this chart very frequently, or in the past, I used to use it a lot, but I've made some updates to the chart recently based on just some better understanding of the pattern. Obviously, as you get better at Ariaswave, you start to see things in different ways and you start putting pieces together. If something doesn't make sense, then probably it's wrong, and obviously you'll know once the time comes if it's wrong. But given that this is such a long-term chart, I've had a long time to think about it, and this is my latest view. So this pattern here, I did think it was a B wave, but I'm starting to believe now that it's actually a D wave pattern that started in 1440 AD. So this particular pattern started off with a a a in brackets wave that actually was about roughly this length, right? Now all this extra price action that's gone on up there is all corrective up until 1994, around there, 95. So that's the part that I had gotten wrong in the past, and well, I believe it was wrong, right? Obviously, that's open to interpretation, but I do believe that this is now the right count, which gives me a better view of the last moves down since then. And we have a 1, 2, 3, 4, 5. It's a type 1 week 5 wave move, and it looks to be complete now, right? So wave 3 is the longest wave. Don't know, actually, probably not the longest wave. I think wave 1's the longest, but it's not the shortest. It cannot be the shortest wave. I believe wave 5 is the shortest. Now, obviously, if you go to log chart, things look a bit different, right? And that there is probably not the right way to look at this chart, even though it still holds ground. Um, I believe that this chart should be looked at in not in log scale, that's for sure. Um, just standard chart settings for this one, simply because if you look at the percentages, they're spaced out evenly, and this is not an exponential chart. So as you can see, the channel here, we're still within the channel, but we've started to see, since this, what I believe is wave 5 low, we've started to see a move up. And I've been saying that this is going to happen for a while. I've even done very in-depth chart analysis on this one, wave analysis, to suggest that from where it hit that midpoint in the channel, I actually had the waves marked out. It was going to continue higher, and it has done that. Okay, and I did that probably like a month or two ago, maybe even 3. Who knows? So the thing that we're looking at here is the channel. Once we break out of this channel, if we break out of this channel, um, and we break above the previous pivot high for wave 4, that's when I think things are going to start to get very interesting. But I do believe we've already hit that point. Right now, I've been busy looking at this chart, but I've also been busy looking at the Dow Jones. Now, the Dow Jones, according to Ariaswave, I have changed the count slightly. Now, this one we do look at in a log in a log chart due to the exponential growth. But if you understand from previous videos, my view is that this is a type 2 expanded wave D zigzag since the Great Depression. And what we've seen is an A in brackets and then a very expanded D wave within that B wave. So we said we had A, B, C, and then D was expanded, and the GFC was the E wave. So to me, I find it interesting that a lot of people say if certain measures weren't taken during this time, that we would have seen a complete collapse. Now, I don't believe that's true. I do believe that potentially we may have seen a retest lower, but eventually we would have come back anyway to hit that all-time high, right? So what they did, okay, it maybe prevented it from going a bit lower, but not completely collapsing, because due to wave C having to be a certain length, well, it obviously went a lot higher, but it could have been a lot worse. But due to the intervention from the Fed, this was basically saved from going lower, and that's why we've continued to blow the bubble even larger. So that's on a monthly view. If we go to the weekly view, zooming in, this I believe is a type 1 week 5 wave move. Like if you're into Elliott wave, what that means is like an ending diagonal pattern, right? Now, I don't like to use the term ending diagonal because I believe it's wrong, especially the way it's described in Elliott wave terms. The way that Ariaswave describes it, waves 2 and 4 have the same corrective pattern as the zigzag B wave in brackets, right? So it's all fractal patterns. It's not that hard to learn, but this actually has changed my view somewhat to suggest that the the March 2020 low was in fact an E wave according to Ariaswave. Now, when I say in fact, I mean according to Ariaswave and according to my own analysis, right? It's open to interpretation. That's fine. Now, the reason why I didn't have that view initially is because when we hit that high in 2018 in January, we had a very sharp move down. Now, on this particular chart, I'll explain it to you, right? So on this particular chart, you can see that there was like a zigzag pattern that happened, right? It's like right here, right? There was another low on this chart, but if you look at the US 30 chart, there was never another low. So that actually didn't make much sense, that it didn't make a low. But then again, the move was very sharp. It's certain charts look different. Not sure why, but if I basically put two and two together, it means that this was an A, B, C, D, and that March 2020 move was an E. So since then, we've had what we need to have is another zigzag. So if this is to be correct, then the zigzag has already happened. It's completed at the moment. We're ready for a move lower. Right now, for me to come to this conclusion, I had to really make sure that there was two more zigzags to the upside in waves 1 and 3 happening at during the move up since the GFC. Right now, something that can confirm this, I suppose, is the RSI. The RSI did make that final high in 2018. So to me, using the RSI is okay when you're trying to detect a wave 3. And the move that we've had up since March 2020 has been basically just displaying divergence, where we've had the opposite happen in the stock market compared to the RSI. That's probably the only time I like to use RSI. That's the usual way I use it anyway. So that's fine. Not going to get too much into detail on that. But I suppose what this is saying to me now is that this is it. We're done for the move that's happened since the Great Depression. This is the completed pattern. Okay. And that means that we're going to see a move that's going to take us back probably down to the long-term trend line that goes back hundreds of years. And most likely we're going to see quite a substantial move to the downside. Harry Dent says about 86%. I wouldn't doubt it. I know that he's been wrong many, many times, but I can see why he has this type of analysis using Ariaswave and also that long-term channel from hundreds of years ago, basically, right? And when you join the European stock market data onto the US stock market data going back historically, that's the channel there. And as you can see, we did touch that channel in 1987 as a retest, and we probably would have touched it in the GFC had they not intervened. But this being a particular type of zigzag pattern, that means we're going to see like a reset, right? So the Great Reset agenda to me is real. And it's not only real because it's a conspiracy theory. If you don't believe it, just go to the World Economic Forum and you'll see it for yourself. Do your own research. I'm not trying to say anything here. But once this move is done, I do believe it's going to be, a pretty swift move, pretty decent move that'll probably last a year or two, possibly even three. But after that, or who knows, right? We could see this move be depression style. I mean, you saw what happened in the Great Depression. It took about 25 years to make a new high. So I don't know how that's going to go. I don't really care at this point. But I do know that once we hit that low, that's the end of a corrective process that's been in place for hundreds of years. And I do believe we're going to see a very huge move to the upside once this happens. So it's not all doom and gloom. I actually look forward to a deleveraging because at the moment everything is blown way out of proportion. It's everything's too frothy, and you know what? People are just basically making money off cheap money, and basically there's no innovation and there's no supply has shrunken quite a bit recently, and basically we don't produce anything, right? Globally, GDP probably not that great, but obviously numbers are distorted for various reasons, and the Fed is always has a nice little story to tell us to make us all feel like we can sleep at night, to keep us dumbed down and quiet. But at the same time, it's just a pattern. It's just a cycle that's ending. It's just something that has to happen. Deleveraging is good because then it breeds innovation, it breeds productivity and growth in supply, goods and services, all that sort of thing. And I think we've just gotten to the point where things are a bit stagnant, and everything's extremely bubbly, the everything bubble, that sort of thing. That's what I believe is going on here. Now, Bitcoin, not too different, right? Bitcoin is in the same boat, in my opinion. There is nothing to suggest that this is going to keep going higher at this point. Nice little rally off the lows there, up the top there. Doesn't mean anything to me. I do believe that it did top in 2017. We've just been in an A-B pattern. Probably going to see a C, pretty sharp, deep C. I'm not saying it's going to go lower than the previous low in 2018, but C waves can be brutal. And if it's going to coincide with what's happening in the Dow Jones and interest rates going basically north, upwards of probably 10% or more, I would say that this thing is going to experience some issues because all that cheap money is going to be flushed out, and all that money that people use to invest, um, well, it'll be delevered. So that's what I'm thinking is going to happen at the top there. Oops, sorry, one sec. At the top there, you can see that we have evening star pattern with a confirming candle on the monthly chart, right? That's on the monthly chart. That's not, well, it's a spinning top. It's not really a doji or a shooting star, but it's still a spinning top with a confirming candle. Like the three black crows, or in this case, three red crows, is a candle. It's an ominous reversal pattern. Um, this did see crazy, insane growth, but on the RSI, it never made a new high. And right now, we can see that wave five, what I called the top here back when this happened in November last year. I did call it. Go back from my videos if you don't believe it. The RSI basically this thing's turning down. I mean, you can see it there. We never made a new high on the RSI. We're not going to. Yeah, open to interpretation. Put all your comments down below. It's just what Ariaswave's telling me, so don't shoot the messenger. Go ahead and have your own opinion like everyone else does, and troll away all you like. Doesn't make a difference. Right? I just go based on the patterns, and I'm putting a lot of evidence together to suggest that this is happening. So just take Facebook as an example of what's going to happen to basically everything. The earnings, the first quarter earnings are not going to be too good. Yeah, we're looking for something big to happen. Whether it starts this year, well, it's already looking that way. So we're just going to have to see what happens from here. Oil, let's go back to oil. This one, I don't look on the log either, log scale chart, due to the move that happened in 2020. I believe that it's still good enough to look for a move down here. I do believe we've topped here, or almost topped. I did produce an idea on this not long ago, looking for the end of D wave. I do believe we've seen that now. I do believe that was a type 1 week 5 wave move. Also, the confirmation will come probably when we break the low of about $80, $81 roughly. Obviously, the best way to know is a break of $62. And I do believe we're going down to $20 or lower. I don't know at this point, but this is also going to be an E wave to the downside before we see a massive move to the upside again. Okay, so it's not the end of the world. It's just another move down. No big deal. We've seen plenty of them before, and we'll probably see another one again. We've got divergence on the RSI. Not that I really use it on zigzags, but you can see there's divergence. Not a big deal. Pretty straightforward there. Timing is obviously not always easy, but at this point in time, keep an eye on this. In terms of what else can I look at here? Gold. In terms of gold, I did say we were going to see a move down, which we saw, right? I called this one probably when we were around the 20th of Jan, potentially, or something like that. I did say we would, I think it was even lower than that. I did say we would move up and then would come down. I still have not removed the markings off this chart, but they probably will need adjusting. But that's the C wave that we saw, and we're probably in the midst of the D wave now. Still early days. Gold may continue to rally just a little bit longer than the market, just as it tops off, as we're looking also for the end of a D wave long term. Here, we need one more zigzag to the upside. We've already seen the first half. We just need the last half. One more all-time high before this thing should then also start to turn lower, like the stock market and all that sort of thing. Looking pretty straightforward on that as well. In terms of the euro, I do believe that this move here is not a reversal. Keeping my eye on it to see basically what happens here. I do believe that we're going to see much lower prices in the euro. I do believe this is a long-term triangle pattern that probably started in 1985, around that time. I think it was. A, B, C, D, E. It's contracting. We are at the point now where we either go to the green line, dotted line, 62 cents, and we just halve this thing. So whether it's happening now or it needs a bit of a pullback, not sure. But, as I see the waves, trace out a corrective pattern, I will provide an update. But at this point in time, that looks like the market update for now. I do believe cryptos are just having a bear market rally, as well as everything else. So hopefully you found this video interesting and informative. Thank you for watching.